What's up, everyone? It's Karthik with MoneyVest. So I've got a very important update for all of you, from Tesla calls getting bought from big institutional investors to exiting their entire position to buying new stocks in Nike and Ulta. We got lots to discuss as institutional investors just disclosed exactly what they were up to in the second quarter 2024. As we discussed in our previous update, today was the deadline, the last day, August 14th, for hedge fund managers, institutional investors, many institutional investors in the US managing over $100 million to file with the SEC 13F filings to disclose all their trades and transactions. And of course, we also got the CPI numbers that we're going to break down in this video. As always, make sure that you drop a like and subscribe to the channel. I'm actually quite unhappy because we do have over 37% of you that are watching the content, that are enjoying the content, and I'm sure finding it super valuable, but are not subscribing to the channel. So please do me a favor, subscribe. I really want to wake up to 81,000 subscribers tomorrow, and share this video with your family, friends, other traders, investors, because this is going to be a long one. We've got lots to unpack. I've got a lot of really important updates for all of you. So do me a favor and share this video with your friends, families, other Discord groups, channels, Telegram, WhatsApp, whatever it is that you use, and also subscribe to the channel, please. I would really appreciate that. Okay, coming over to the market. So Dow Jones up 61 basis points. We had the S&P up over 38 basis points, and the NASDAQ essentially flat. So we didn't really see a lot of momentum, a lot of back and forth here on the day for the markets. It was kind of a mixed day overall, as you'll see in the heat map in just a minute. But we had over 3,200 stocks declining on the day, with over 2,400 stocks advancing on the day as well. So Wall Street ticks higher after inflation data clears the way for potential rate cuts. And this right here were the CPI numbers. We had a whole live stream breaking down the inflation numbers. Came on par with the consensus for headline CPI at 0.2%. Year over year came in slightly better at 2.9% versus the consensus of 3%. And ex-food and energy, which is the core CPI, which is exactly what the Federal Reserve focuses on more, came in at 0.2%, again on par with expectations, and year over year sitting at 3.2%. That was exactly what the expectations also were. So I think yesterday's PPI report already paved the path for today's inflation report. So I think yesterday's move kind of compensated for both days. That's why we didn't really see a lot of momentum here on the day today. And this right here from Charlie Bilo kind of highlighting some of the price increases over the last 4 years. We've seen medical care up almost 8%. We've seen apparel prices, increase over 12.7%. We've seen new cars, prices for new cars up over 20%. Food at home up over 21%. Shelter prices up almost 23%. Food away from home 25%. Used cars 26%. Electricity up 30%. Utilities, gas utilities up 37%. Transportation up 38%, 48% for home prices, significant increase in asset purchases such as homes, and of course individual stocks and overall assets as well. Auto insurance 52%, gasoline up almost 60%, and fuel oil up a little bit over 61% as well. So overall, over the last 4 years, of course, we have seen significant amount of inflation on a price basis, and year over year is really what the numbers are quoted in the financial media, and especially what the Federal Reserve focuses on. And that's what they are quoting when they say 2%, 3% on a year-over-year basis. So for this particular report, we saw a 0.2% increase for all items. 2.9% where we are is year over year. So this number compared to last year's July, we are now at just under 3% on a year over year basis, compared to where we were in June of 22 at well over 9%. So we have seen a significant amount of disinflation, but this is not really deflation, where prices are not going down. They are going up, but they're going up at a slower pace, slower rate. That is called disinflation. That's what we're witnessing at the moment. And all items less food and energy. So core CPI up 0.2% also, coming in on par with expectations of 3.2%. Now, the more important news is going to be large money managers. All managers, institutional managers, investment managers managing over $100 million worth of assets are required to file the 13F filings. And I'm actually going to be doing an extended video on this, going over all all the large money managers and all the big moves. But in this video, I've kind of really broken it down into Berkshire Hathaway. So we got Warren Buffett, we got Bill Ackman from Pershing Square, we've got Michael Burry from Scion Capital, and we've got Ken Griffin from Citadel. So those are the 4 big funds that I've essentially drilled down on for this update. But I will be going over, a lot of other ones in our future updates, because there's hundreds of billions, if not trillions of dollars under management from all these filings. As you can see, that all of them are from today, so August 14th, all 13F filings for all of these hedge funds, institutional managers, again, managing hundreds of billions of dollars. So starting with our very own Bill Ackman, $10 billion in assets under management for Pershing Square, 9 total holdings, and very notable increases in Nike. So 3 million shares added in Nike, with a overall value of just under $230 million, and also actually reducing Chipotle in the previous quarter. So Chipotle has always been one of his big holdings, and he sold just under 29 million shares worth over $1.8 billion, or 17% of the portfolio. So that was actually a pretty big exit. Chipotle, maybe he knew something. Maybe he knew that Chipotle's CEO is going to actually move on to Starbucks. You never know, of course. And also a pretty big notable increase is none other than the stock that I myself picked up on this weakness is, of course, Google. So Alphabet coming in with combined 4 plus 7.5. We're talking over 11 million shares picked up, valued almost $2 billion, 726 million here, 1.4 billion here. We're talking $2 billion worth of Google stock picked up. This was the largest increase, as you'll notice, top increases for the quarter for Pershing Square. And of course, picking up Nike as well. Nike, I think after hours was up 5% right now as of the time of this video. So if you come over to Nike, if you take a look, Nike stock right now is up over 4.5% on this news. And Chipotle might be down. I'm not so sure, but let's take a look. Slightly flat. And then, of course, one more stock that we're going to take a look at from Warren Buffett that he picked up is Ulta Beauty. Ulta is actually up 13%, just under 14% right now. So a pretty significant increase after hours, after we learned that Warren Buffett actually started a new position in this stock. Now, before we get any further, if you are enjoying this video and you want more updates and more members only videos, more real-time updates in our Discord, you can join over 2,214 members. We got lots of members, experienced investors and traders from all over the world. You can join our MoneyVest community. We've got a 51% discount. You can lock this price in for life. And right now we are offering this with just about 1 spot left. So link's going to be down below if you are interested in joining us for the month of August. And we're going to be opening up new spots in September. So link's going to be down below. Love to have you on board. And of course, you get all the access to trade alerts, our MoneyVest index, all the members only private videos, including our MoneyVest platform as well. So coming back over to Bill Ackman. So these right here are going to be the entire 9 positions. We got Hilton Worldwide Holdings. That's his biggest position. That is going to be just under 9 million shares, and the current value sitting at just under 2 billion. I believe Google is now actually going to be a much bigger position for him after picking up those shares, because we do have a position here just under 1.4 billion, and then another position at 726 million. So combined, I feel like Google is actually going to be a much bigger position for him compared to Hilton. And then we got Chipotle now has reduced down to the 3rd spot, if you're accounting for Google as an overall company. So Chipotle is going to come down to 1.8 billion. That's a 16% reduction quarter over quarter. And then, of course, we got Howard Hughes, we got Canadian Pacific, we got Brookfield Corporation, and then, of course, Nike picking up over 3 million shares here for the quarter ending in June. Let's come over to the biggest investor that we know of, Oracle of Omaha, picking up Ulta Beauty, as we discussed, and Ulta Beauty pushing up almost 14%. So this is a portfolio for Warren Buffett, just under 280 billion, 41 holdings for him in his current position, or current portfolio, I should say. And this right here are some of the notable increases and decreases. It goes without saying that Apple, of course, being the top decrease for this quarter, 400 million shares, or just over $84 billion, and that's 30% of the portfolio gone, slashed in the second quarter, as we already know. Snowflake also coming out of the door just a little bit. And then we've got companies like Bank of America getting picked up, American Express, Coca-Cola, Occidental Petroleum, Moody's, Chevron, Chubb Limited. We got Citigroup, and something that kind of piqued my interest was none other than Amazon. So Amazon, Warren Buffett picking that up, 10 million shares, just under $2 billion worth of Amazon getting picked up in the second quarter for Oracle of Omaha himself. And also, of course, as I mentioned, so those were, of course, based on the number of shares. So that's why Ulta Beauty did not make it up there. But this right here is Ulta Beauty. It's in green. It's a new position for Warren Buffett. Imputed price sitting at just under $400, 690,000. So not a big position, but still, I mean, $266 million is still not nothing. It is still something. But of course, it's a pretty small position in the context of what Warren Buffett actually invests and does. Now, coming over to some of the other notable increases, this is based on the percentage increase quarter over quarter, which saw the most increase. SiriusXM Holdings, we got Liberty Latin America, we got Jeffries, we got NU Holdings. We also saw Amazon, which I wanted to put up there because we did see an 8% increase quarter over quarter. Previous shares were around 107 million. And again, the previous value was 1.2 billion. Current value sitting at just under 1.4 billion for Warren Buffett. Actually, I'm looking at the wrong row here. I was looking at NU Holdings. This right here, 10 million is the number of shares that he picked up, of course, and 1.9 billion is the current value. It's a 7% increase quarter over quarter, and the share price, imputed share price, around $193 for the company, for Amazon, for Warren Buffett as well. Now, let's come over to the big short investor himself. We've got Michael Burry. He actually trimmed all of his other holdings. He actually went all in on Alibaba and Baidu and exited almost every other stock. So small portfolio, right? So we're not talking significant amount of money here, 52 million, 10 holdings for Michael Burry. And these right here are the interesting things that he made decisions on. Putting everything into Baidu, JD.com, Alibaba as his biggest position. But then if you come down to the stocks that he sold, we've got Square, we've got First Solar, we've got Advanced Auto Parts, we've got Citigroup, we've got BP, right? So another energy company over here. Then we've got Safe Bulkers, we got Healthcare, the Cigna Group. These, by the way, the ones that are in red, he's all out. He's completely exited these positions. So you can see that they're all current shares are currently zero, with literally 100% all gone. So pretty much exiting the entire position and going all in on China. So he's really betting heavily on China, kind of following in the footsteps of Ray Dalio, whereas Warren Buffett is buying companies within the US, and even Bill Ackman buying companies like Nike, Amazon, Google, Alphabet. So we've got two very contrarian views here. One, Michael Burry is selling out in the US and going all in on China. Then we got Warren Buffett and Bill Ackman betting heavily in US companies. If I were a betting man, I would definitely be betting with Bill Ackman and, of course, Warren Buffett, and not necessarily with Michael Burry. Now, one more stock that has not been discussed yet, and again, I'm sure it will come up more and more, is going to be Tesla. And this right here is going to be Ken Griffin, Citadel, managing well over $500 billion in assets under management. Significant amount of positions. We're talking 14,000 positions. We got lots of analysis that we can do. So this right here is going to be everything. Some of the major notable increases and decreases for the quarter. NVIDIA calls and puts, Microsoft calls and puts, Meta, QQQs, Advanced Micro Devices, Google. Mostly options that were decreases for the quarter. But one big notable increase that I saw was a Tesla call, 41 million, worth over $8.2 billion. That's a pretty big bet if you ask me, especially when you're talking options here. So Tesla call, again, we don't really know what the construction is for the overall option in itself. Like, we obviously don't have all the details, but if he's buying a Tesla call, 41 million shares worth over $8.2 billion, then I'm assuming it's going to be a very much of a bullish call. Again, we don't really know exactly the details of that trade, but I'm going to guess, with my understanding of options, it is a pretty bullish bet on a Tesla for the upcoming quarter, right? So as I've mentioned before, people could be selling stock for whatever reason. They can be exiting positions for whatever reasons, but they only buy for one reason. They believe that the price is going to go up. They believe there's value there. QQQ also picked up over 3.3 million shares in the second quarter. TSMC, just under 7 million shares for that stock. Then we got Bristol Myers, we got Disney, we got XLK, which is a technology fund. And we've got, again, that's also a call for 2.2 million. And we've got a put option also on XLK for 2.73 million shares. That's 617 million and $508 million call. So I'm assuming there is some structure, some option strategy there. And Broadcom picked up just about 500,000 shares worth over $776 million. So these right here were some of the more notable increases, decreases for the quarter for some of the more notable investors. I will be doing an extension of that video going over other investors because there's a lot that we can break down, and there's a lot of companies, there's a lot of stock specific, right? Who was the biggest buyer of Nvidia? Who was the biggest seller of Nvidia? Who picked up most Tesla shares, right? So a lot of that is going to be discussed in our future update. So another video that I will be posting analyzing all the 13F filings, and that's something that I'll be breaking down in our future video. So Google here down a little bit over 2.3%, Tesla down over 3%. We had Nvidia pushing higher, Microsoft, Eli Lilly, Apple, Oracle, Adobe, all these companies are SaaS companies, a lot of momentum in technology. Amazon struggling, Meta struggling, Tesla, Google struggling, Apple a little bit higher. So Google, of course, struggling a lot because of the Bloomberg report citing unnamed sources. The U.S. Department of Justice, so DOJ, is reportedly mulling plans to rein in on Google's dominance in online search, including a potential breakup. I don't think that's a pretty big deal. I think we have seen this happen over and over again. I think, Sundar Pichai is going to spend some time in front of Congress giving testimonies. It's going to be back out, and I think we're back to business. So we've seen this happen over and over again, multiple times. It's happened with Meta, Microsoft, Satya Nadella, Mark Zuckerberg. So in my opinion, Tim Cook also been a part of that. So, every once in a while, you kind of see this catalyst, and in my opinion, it's been a nothing burger so far. Is it going to be anything different? We don't know yet, but I'm not going to pay too much attention to it. Google's trading at a pretty relatively attractive valuation, and I don't mind buying that stock. I don't mind dollar cost averaging, and Bill Ackman seems to agree, picking up almost $2 billion worth of Google stock in the last quarter. If you take a look at some of the ETFs, so crypto definitely selling off. We did see some selling pressure in the crypto section. Fixed income and bonds continue to push higher with TLT, TMF moving higher. We did have some, of course, equity markets pushing up as well. So QQQs, Dow Jones, VTI, VOO, SPY, all pushing higher. So overall, it was a bit of a mixed day with, of course, volatility getting crushed, absolutely crushed. Now back down to 16. Can you believe that? Last Monday, we were over 65, and now we're at 16. Like an incredible amount of selling pressure, 65, 70% lower than just a week ago. So overall, most sectors were green, with basic materials and comm services selling off. And on the week, we had all sectors, all 11 sectors in the green. In the last 1 month, of course, utilities, real estate pushing higher, with services, technology, and consumer cyclicals were selling off here. Bitcoin just under 59,000, and Ether just over $2,600 as well. Now, some other really important updates talking about Japan. So Japan's Prime Minister Kishida to resign, paving the way for a new leader. This actually comes at a bit of a surprise. Not a lot of people expected this. So exiting to clear the path for what we didn't really want to see, which is a higher interest rates in BOJ from BOJ, so Bank of Japan. And Nomura also mentioned that BOJ could hike interest rates again in December, even if inflation trends sideways. So reading further, you'll notice that they mentioned the Bank of Japan is likely to lift interest rates again in December, even if inflation trends sideways, as the once sleepy central bank appears eager to move further away from its accommodative stance. So as we know that they've been very accommodative, very easy policy, and that's what created this overall carry trade for the world, with almost $20 trillion worth at risk at lower interest rates, and then of course getting invested over in higher yielding markets such as the United States and Europe. And if they continue to raise interest rates, that's going to put downward pressure on the US dollar against the yen. In other words, yen is going to appreciate against the US dollar, and thereby creating a bigger problem in this carry trade as it continues to unwind. Nomura says that we still see the December monetary policy meeting as the most likely date for the next interest rate increase, and a December hike, which would mark the 3rd July, could come even if inflation doesn't pick up pace, as the BOJ's July summary of opinions signaled a shift among the central bank's policy making strategy and plan as well. Now, amidst all of this, Powell is also set to speak next week at Jackson Hole. Jackson Hole historically has actually been very, very bearish for the market. I want to be very clear. Historically, Jackson Hole meetings, the 2-day meeting, has been actually quite brutal. I still remember 2022. It was absolutely the worst. If you come over to, what happened with the market, so S&P 500 here, you come over to August of 2022, so the bear market of 2022, you'll notice exactly how much the markets were down that particular week. I still remember it like it was yesterday. So this right here was actually the sell-off, August 14th. Markets were down over 2% for that week. And then September 18th week, they were down almost 3%. So we did see quite a lot of selling pressure. So Chairman Jerome Powell will use his Jackson Hole speech next week to set the table for September interest rate cuts, while the actual size of the move will be determined by the August jobs data that comes in a week later. So first week of September is when we're going to get the August report, jobs report. And Powell will set the tone for the coming monetary easing by leaning into the need to be proactive rather than reactive with the rate cuts. And the details won't be set until the Fed sees the August employment data on September 6th. And this right here is from Krishna Guha, Vice Chairman of Evercore ISI, says, and I quote, "This is now a labor data first Fed, not an inflation data first Fed," meaning that they're going to be focused more on labor data, unemployment, rather than inflation. I don't fully agree with that. I think they're still very much focused on bringing inflation down. And I think today's report a little bit reinforces that idea that there is a possibility for lower inflation trend, but that is still going to be their main focus, I feel. I think, yes, unemployment moving higher is a bit of a concern overall, that the trend is moving upwards. That is not what the Fed wants to see. But at the same time, that is not what the main focus is. The main focus is getting inflation down to 2%. And finally, I think it's really important. I think it's still going a bit more understated. On the brink, the potential for a broader conflict in the Middle East. I think we still have to address that Iran has still not retaliated or responded, which is a good sign. But at the same time, I'm hearing reports and some more updates that they are combining a plan with their allies, whether it's Lebanon, Syria, Yemen, or other adversaries in the area, to actually formulate or create an attack in Israel, which is going to be a little bit more it's going to be an attack that doesn't escalate the situation, but rather de-escalates the situation, where it is a response, but it's not a response that essentially warrants a response from Israel. So I hope that makes sense, because that's the geopolitical tension that we are facing with at the moment. Something that can, of course, create havoc for the oil market, because Middle East very much controls oil. And then, of course, for the global markets as well. So something that we have to pay attention to. Again, keep it in the back of your head that there is conflict in the Middle East. And if Iran were to retaliate over the next few days, if you hear any types of news related to that, even over the weekend, that could create some volatility once again for the markets. Now, speaking of volatility and some of the other metrics, these are the MoneyVest dashboard metrics as it stands right now. I just calculated these 20 minutes ago. So the MoneyVest index sitting at 3.61. The PCC, that's the put call ratio, now sits at 0.889, meaning the markets are still positioned well with more calls than puts at the moment. We've got almost 60% of stocks trading back above their 50-day moving average, so we are in the 47th percentile, and 68% of S&P 500 stocks are trading back above their 200 simple moving average. We are in the 54th percentile. Volatility is back down to 16, so we are in the 40th percentile, and we got the contango level back in the positive territory by 0.06%. So all these indicators are flashing yellow or red, and that means we need to be cautious, we need to be alert. The risk reward is not as favorable as it was last week, of course, as the markets have rebounded and we've seen a nice technical recovery. So keeping that in mind, I think we need to still remain cautious, especially as the volatility comes down back in the low 16s. As you can see, if you come over to the VIX, just take a look at this entire week after week. Day after day, we've seen from highs of 65, the VIX has been crushed over 70%. In fact, I think almost 80% it might be down from its all-time, from its recent highs, over 75%. So back down to 16, the buying window was not that long. It was only about an hour, 2 hours maybe, where the VIX kind of stayed up there. And then, of course, got crushed all the way back down to now sitting at just over 16. So we're watching 15 now. And once again, these are going to be some levels to keep in mind as buying opportunities when the risk reward is very, very good. Crude oil prices, it continues to be very volatile. So we have seen a little bit of a spike again with those tensions in the Middle East. Got up to as much as $80 a barrel. Starting to see that roll over a little bit back down to $77 a barrel at the moment. And the inversion of the yield curve continues to be there. We're seeing the spread still negative, down about 12 basis points. We were very briefly positive, as well as over 1 to 2 basis point here, but then of course rotated back lower at the moment. So we've got negative spreads between the long duration and the short duration bonds at the moment. Now coming over to the markets, SPY and QQQs. By the way, the MoneyVest index is a little bit delayed here. 3.54 is where it shows. This number will update tomorrow after everything closes out, but I just gave you the reading for right now, 3.61. That's what this number will update to tomorrow. So coming over to the markets, starting with QQQs. Let's look at the NASDAQ 100 first. If you come over to the 30-minute time frame, what you'll notice is that this is the overall trend that we're still participating in. So this is the lower high and the lower low. And I asked you guys in my previous technical update whether we're going to see the scenario A, which is going to be this, or scenario B. Are we going to see the see lower lows again, or are we going to see a bit of a breakout and get up to over 476? I think a lot of you guys are still skeptical of this rally and still believe that scenario B is possible. And I think that's smart. Plan for the worst, hope for the best. I think that's the best strategy for investing in general. Plan for the worst, right? So if there's markets coming down, if there's volatility spiking again, we're ready. We're dry powder. We're ready to take advantage of those deals. But of course, if the markets continue to move higher, that's great. I'm going to be selling calls. I'm going to be holding on to those gains, and we'll start to once again raise capital, raise cash, and de-risk a little bit moving forward. So that's going to be a level like close to $475. And if you do start to see some momentum back lower, considering the overbought conditions in the market on shorter time frames, like I said, will be ready to deploy more capital and take advantage of those deals once again. Some support levels to keep in mind for QQQs at 454. Coming over to SPX, and a very similar pattern. So overall, lower highs and lower lows. I believe I analyzed SPY last time. So this right here is going to be the overall technical breakdown. I believe it's SPX. Let me just go back. So yes, this right here is the lower highs for S&P 500. And of course, this right here is going to be the lower lows for the market. I mean, you can kind of mark a few different things. So you can either go like that, right? So that's lower lows, or you can also go like this. But either way, we are making lower lows for the markets as well, because we're not going as high as we did the previous time. So boom, once, twice, 3 times, 4 times, consistent lower lows. And then of course, this right here, lower highs, lower highs, lower highs for the markets as well. So again, the question then becomes, is this it? Are we going to see some momentum higher, and are we going to see that breakout from here, potentially up to this level, or are we going to get rejected here and of course start selling off further? We got a very important resistance to watch for S&P 500 at 5,500, 5,550 to be precise, 5,560, call it 5,560. Previous resistance, we have gotten rejected at this level quite a few times. So once here and another time over here. So there's a little bit of resistance there at 55.65. Now coming over to individual stocks. So starting with Apple, pushing higher a little bit to 21 is where we are. Basically flat after hours. Resistance all the way up to $225 with the support level sitting put at 220, down to as low as $215, $216 for Apple. So resistance is going to stay put all the way up to 224 for Apple moving forward. Amazon, on the other hand, basically flat. Resistance is going to stay put at 173. So this right here is going to be that level to keep in mind for Amazon. Support level at close to 166. Talking about Tesla, you'll notice that Tesla here selling off, getting rejected exactly at $208, as we have discussed in our previous updates and videos. If you come over to the 30-minute time frame, this is exactly why we have these levels. These are levels that are super important. If you're taking notes, if you are creating a plan around these resistance and support levels, most often than not, you are going to be very successful, right? Because these are levels that traders and technical analysts are watching very carefully. We marked out $208 yesterday for a reason. This is a level that has previously acted as a support and as a resistance as well. And you'll notice that we got rejected there, sold right back down to low 200s. Talking about NVIDIA. And NVIDIA on the day here pushing up 1.6% after hours, slightly lower. And we're now coming up to that resistance for NVIDIA. So on the 30-minute time frame, again, you can see how precise this is. Got rejected once, twice, and 3 times and closed below that level, and that is $118. Perfect. I mean, this is literally just quite perfect that we're getting rejected at that level for NVIDIA. Of course, tomorrow and later this week, we'll find out if NVIDIA has what it takes to break out above 118 to potentially push for 140 again. That's pretty much the all-time high. Or if we're going to get rejected, sell off down to $109 per share for NVIDIA. Talking about Google, and Google here on the day pushing down 2%, getting rejected here inside this red rectangle, something that we have discussed. So very, very strong area of resistance for Google in and around those levels. Support level is going to stay put down to $153 for Google, and resistance all the way up to 174, 175 for the company. Microsoft, on the other hand, continues to move higher. So very nice move to the upside, 69 basis points. Next target and resistance all the way up to $430 a share. Very nice RSI, MACD, and L3 banker oscillator. So all of that suggesting for more potential upside for Microsoft, and resistance going to be all the way up to $430 for the company as well. Talking a little bit about Meta platforms, and Meta here is very close to its all-time high. In fact, you can see that Meta is probably the only stock that is down less than 3% from its all-time highs and still within the context of a dip. So again, you can access this entire platform. If you want to join, link's going to be down below with a few spots left. Meta here, resistance all the way up to $540. That's the level that we have talked about. Although the RSI, MACD, and the L3 banker oscillator getting a little bit more on the overbought side. So just got to be super careful and cautious with Meta here. I think that's a good time to start selling calls on Meta if you actually own more than 100 shares. Now talking a little bit about Netflix. So Netflix continues to slide a little bit lower, but up over 2% on the day. So doing incredibly well, breaking out from its resistance of $650. We'll go ahead and turn this level now into a support for Netflix. So doing incredibly well. And the next target and resistance is going to be all the way up to $700 for Netflix, with the support level staying put right here in the 640s and 50s for this company as well. Talking a little bit about Enphase, so ENPH, and Enphase here more or less consolidating sideways, down about 1.2%. Resistance all the way up to $137, $141, with a massive support sitting at $96, $97 for Enphase. PayPal, on the other hand, had a pretty strong day, pushing up over 1.5%. So the next target is going to be as much as $68, $69. So this right here, inside this red rectangle, is where the massive resistance sits for PayPal. A lot of supply. We've gone rejected there once, twice, three times. It's like a quadruple resistance for PayPal that we need to watch. And then finally, Visa, still within the context of a downtrend. So lower highs and lower lows. Massive resistance sitting roughly at 266 for Visa. So in and around these levels. And support level is going to stay put at $250 for Visa as well. And then finally, we got Costco. So Costco here, pretty much trading near all-time highs. Resistance going to be at $872. So that right there is going to be that resistance, with the support level staying put at just under $840 for Costco. So hope you all enjoyed this video and a complete update on the markets. And of course, we had a lot to discuss. And that's where we are with inflation numbers coming in slightly better than expectations. Jackson Hole meeting from Jerome Powell's speech next week. Unemployment data on September 6th. Japan, Prime Minister resigning, with a new leader coming in very soon, with a potential another hike from the BOJ. Not to mention there's tensions in the Middle East, a lot of institutional investors buying and selling stock. So we had a lot to discuss, lots to break down. So make sure that you do join our MoneyVest platform if you want, 51% off, limited time. And of course, you get access to everything. You can engage with over 2,200 members on our community. So as always, happy investing. I'll see you all in the next video.